Hi there. Welcome once again to Prices at the Pumps, SaltWire's weekly look at all things energy related. I'm Scott Squires. Pleased to be joined as always by Dan McTeague. And Dan, a little different format today. We're going the portrait style. You know, we like to cut short videos for YouTube, TikTok, etc. So a little different look today, but the content the same. Lots to get to today, but let's start off where consumers love us to start off, and that's talking about the prices. Prices adjusted in the next couple of days. Let's talk Newfoundland and Labrador first, who set their prices tomorrow, Thursday.
So in Newfoundland, let's look for a small decrease, maybe a third of a cent. Nothing really to write home about. We didn't have much of a decrease last week. I thought it was maybe a little bit more on the gasoline side. Diesel, though, if you need diesel, it's really where you want to be because diesel prices will drop a little over 3 cents a liter in Newfoundland. And of course, that's a reflection of what has been pretty much for North America and the Northern Hemisphere, much warmer weather. Unfortunately, that doesn't necessarily mean the same for the other Atlantic provinces come Friday. Because, of course, the way in which they calculate, PEI uses what's called rack prices. The two others, New Brunswick and Nova Scotia, tend to base their average on 5 days as opposed to 7, which is what Newfoundland does. The values of prices on Friday were pretty important for Newfoundland. That's why you got a bit of a decrease. You might actually see no change or perhaps a very slight increase for gasoline prices for the three other Atlantic provinces, and for diesel about the same, but a little closer to 2.5 cent drop for diesel. So a little bit more of a savings in Newfoundland, a little less of a savings, but either way, it looks like prices are dropping, at least on the diesel side, and not much to write home about when it comes to gasoline.
So after a couple of weeks of prices going up, last week they dropped in this region, and you're saying, within a few cents of each region, should see a bit of a decrease again this week. So what's going on the world markets, Dan, that's leading to these drops the last couple of weeks after the increases we saw?
Well, it's important to know that in the United States right now, oil prices tend to be very stable as a result of many refineries going through their turnaround period. This is February, the month where they tend to go from winter blends of gasoline to summer blends of gasoline. Refineries, which run very hot much of the year, have to go through some form of maintenance. They usually do this twice a year, February and again in September, October. It looks like they're not using a lot of oil and they're not producing a lot of gasoline. So there's been a bit of upward pressure on gasoline and very little pressure on the oil diesel front. And that's why we've seen diesel prices fall. But that's going to come to an end, likely in the next few days. Most refineries are coming out and will start to churn up their demand for oil, and that could mean higher pressure going forward. But up to now, we've had a bit of a bonus, and again, we are seeing an energy market in which fundamentals are being severely discounted in favor of what's going to happen with interest rates or good economic news, which is very stimulus for demand. It makes demand go through. More people working in the United States means more fuel being used, but yet markets are looking at that saying no, it could mean that they won't take the foot off the off interest rates, and therefore that's not good for oil prices and energy prices going further down the road. The two are not connected. But in the world in which you have a lot of people who are called energy traders, they're actually not traders. They know very little about energy. They're just simply looking and treating energy and commodities that you need to consume as if it's some kind of stock market, buy, sell, buy, sell. And that's creating the kind of confusion we're seeing on the market. But there is no confusion to the idea that the global supply of oil is tightening, and that's going to mean much higher prices in 2024 than most people had thought. You and I have been talking about this for the past several weeks. I really don't care what analysts have to say at this point. You can only ignore fundamentals so long before you start to reach a problem.
And Dan, that leads me right into a column that was posted earlier today by Javier Blas, a really good follow. He's a columnist with Bloomberg, and he sent out a post on X with his column attached, but it says, OPEC plus countries need to decide soon, likely by March 5th, he says, whether to extend their first quarter voluntary output cuts. The market is widely expecting OPEC plus nations to fully roll over the cuts into the April-June period. In simple terms, for the average consumer like myself, Dan, what does that mean? What's that telling you?
Well, led by Saudi Arabia, OPEC is plus, which means Russia and a few other countries, has decided to cut back on production because they think the world is dysfunctional. The energy markets, as I mentioned, are out of sync. And so, to make the point, they're simply going to continue to show discipline as they have been able to do, and not supply the world all the oil that it's going to need. And as a result, force prices back up to where I think they believe it ought to be. West Texas Intermediate should be about $80, $85 a barrel, Brent at about $90 a barrel. The fact that it's at 83 for Brent and 78 or 77 for WTI, and it continues to show weakness, is all the more reason why the block of countries that represents about 40%, 35, 40% of the world's oil suppliers are willing to say, let's extend this. It is not in our interest to sell more oil to a world that's going to continue to trash its value. So we're going to keep it in the ground. And by, I would say second quarter, so starting in the month of April, May, and June, you're going to start to see prices on oil move back up as much as $10 a barrel, which means that gasoline could be another 10, 15 cents a liter higher. The federal government will, of course, add yet another increase to its carbon taxes of almost 4 cents a liter for gasoline here in Atlantic Canada. And we have the switchover from winter to summer gasoline at another 6 cents a liter. So you can see why gas prices could start to touch levels we haven't seen since 2022. In other words, getting much more expensive. Not as crazy as that time post-COVID, but certainly a lot more expensive than 2023 and uncomfortably so.
And Dan, as we're talking about oil, it leads me to think about what's happening with, a push for electric vehicles. And certainly here in Canada, we've seen a big push. But lately, Dan, I've been seeing a lot of news reports and columns written about a lot of companies, businesses, car manufacturers, etc., either scaling back or maybe even altogether removing plans, at least in the short term, to build EVs. And just recently, a Swedish columnist, Peter Emanuelsson, Peter Sweden on X, put out a post saying Mercedes is scrapping their plans to make electric vehicles. They will continue to develop petrol and diesel engines for many more years. Audi's doing the same. And then he says, what's going on? Why are they abandoning their previous EV plans? And of course, I'm sure there's more to the story, but that's a big headline. And then BBC News World last night put out a post or a column saying that Apple, the company Apple, the iWatch, Apple TV, Apple, Apple, unplugs electric car project, report says. Now, it was never anything that Apple officially announced they were doing, but there was a lot of speculation and talk about it. And it's basically saying that, reports are saying that they've given up on this plan altogether. Dan, we know we're moving towards electrification and some kind of different vehicle besides internal combustion engine. But what's all the chatter saying to you lately about what's happening with the electric vehicle market and the demand for such?
Well, how's the old expression go, Scott? If you can bring a horse to water, but you can't make it drink. There is the take up that I think many of the enthusiasts out there thought there would be. And while incentives are helpful, subsidizing the manufacturing of batteries, the manufacturing of these vehicles, the subsidizing and the paying out through tax dollars of infrastructure and the subsidies to buy these things, it's still something that a lot of people are very, very, unwilling to look at. Now, if I'm a major manufacturer, I'm not surprised that, even with the incentives, what happens when I'm left with inventory I can't sell? Worse. And listen to this. What happens in the next year or so when China begins to flood the market with electric vehicles that can be purchased for half the price of the ones being offered currently by the major, 10 or 15 manufacturers we have in Europe and North America? What happens when they dump those products into the country? It is very much a question of not looking before you leapt, as I've said before. It's also a question of saying maybe we were a little too enthusiastic and too ambitious and too optimistic about what lie ahead. But for a lot of people and a lot of companies, you have now Toyota, Mercedes, Audi. Volvo has walked away from its commitment behind one of the companies whose name escapes me right now. It's becoming apparent that the wheels on the EV dreams are falling off. And for that reason, I think it's an important time for a bit of a pause and a reset in our thought. Because when you have a government of Canada that says not only are EVs probably not going to be great, but we don't want to build roads to accommodate them. I'm being tongue in cheek, of course, because that was the position taken a week and a half ago, although we denied it, of our environment minister. It seems to me that there is a convergence of reality that's starting to really, really play an important role at a time when governments are finding less money, spending a lot of money they don't have, going into massive debt. The public is becoming less. MNP this morning said 48% of Canadians are living paycheck to paycheck. Those are very sobering numbers, and I think it's something that the auto industry is very sensitive to. They have an obligation to their shareholders. They can't be buying stuff that's just going to sit on car lots that no one wants. At the end of all of this, political, economic reality is going to take a big bite out of the fantasies behind the EV. And yes, we may very well have 10, 20% of vehicles someday that will be EV, 10, 20% that'll be running on hydrogen engines, and some that'll be running on, whatever, new technologies are out there. We're not there yet. Internal combustions are going to be around, at least for our lifetime.
Dan, that's why it's always so great to have you join us each week on Prices at the Pumps here on SaltWire to help wade through some of these things that, the headlines and the different things that you see. And before we let you go, Dan, I want to talk about that image behind you. But first, when you're not with us here at SaltWire, where can folks find you, Dan?
Yeah, so Canadians for Affordable Energy is affordableenergy.ca, and of course, Gas Wizard is my website for gas price prediction, and Gas Price Wizard is my handle on Twitter. Those are ways to communicate. But as for this wonderful little painting, I'll tell you, I had to put out a few bucks. I actually had to get a line of credit to go to Village Value. I got that in Value Village. I couldn't pass it up, and I thought it'll be very heartwarming to my good friends here in SaltWire in Atlantic, Canada.
Well, it's certainly got an Atlantic coast, East Coast feel, a good vibe. And Dan, we appreciate you taking the time and making the effort to have that backdrop behind you. So well done.
Let's keep it there. You know where my heart is.
Indeed. Well, we enjoy having your heart and your photo, your painting behind. What is that? An oil painting, Dan?
It's an oil painting. Yeah, I think it's kind of like a neat little thing with some. I don't know. I'm not an artist. I talked to my daughter, but it has like little pieces of fiber in it or something. But I picked that up for $21. Couldn't look like the kind of thing that would go perfect in this room. And anybody wants it, I think I can always offer it. Maybe one of those things by some starving artist that's going to be worth $3 million. If that's the case, you won't be seeing me here next week, Scott.
Yeah, as seen behind Dan McTeague on SaltWire Prices at the Pumps. Dan, listen, always great to chat with you. Enjoy the rest of your day. Have a great weekend ahead, and we'll get together and do this again next Wednesday. How's that sound?
You too, my friend. Thanks very much, Scott. Good to be here at SaltWire.
Thanks.